I want to start macro, and I promise not to stay there for long. But we seem like right on the cusp of a Boris Johnson coronation as Prime Minister of the UK. He has said repeatedly that he will take the UK out of Europe come what may. As someone who owns a lot of companies in Europe with a lot of exposure to a potential hard Brexit, what are the risks and what can you do to mitigate?
Thank you, Ed. Happy to be here. It's been, discussion and debate for, many months now. A lot of us have been completely wrong, let's be honest, at least on the outcome. So, of course, as a CEO of a European company with many portfolio companies, we've essentially concentrated on analyzing the risk, the mitigators, if any. It happens that we, as Eurazeo, we don't have much presence in the UK. In terms of direct portfolio companies, not much exposure to the sterling either. Few of our companies are exposed, so it's a lot about those type of mitigators. Change of travel in leisure, impact on the currency, impact on our people, if any, moving back to continental Europe. So we've been, and this is my position as a CEO, analyzing the risk and the consequences since now, at least 18 months. We're very well prepared for all cases.
Now, I want to talk a little bit about the private equity model, and we can focus on Europe or globally because I think both are relevant. Traditionally, we think of private equity as you acquire a company, take out a lot of costs, and then sell the company or take it public. Now we're seeing a trend where private equity is holding on to companies for much longer, requires much more operational expertise. How has that changed the culture of the firm, and how do you hire to actually meet that need?
I mean, that change has happened a number of years ago already. I'd like to say that industry not only is here to stay, but is here to grow, and there's a reason for that, which is exactly the one you've just mentioned: the value add that private equity investor brings to the portfolio company we invest in, to the management team that we team up with. And what does that mean, value add? I mean, those times that you're referring to, if they have existed, they are long time gone. It's always been an industry providing significant value to the table, so digital, technological expertise, ESG, global ambition, global presence. We as a firm, managing 20 billion, which is sort of big and small at the same time, depending on from where you're looking at it. We have a presence in 9 different cities. We are present on 3 continents. So this ability to partner with the companies and bring this global vision and international development, it's another example of the value added that you bring.
But just on this value added thing, because another trend is that sponsors are passing companies among each other with much longer tails now. Instead of sort of it two times between sponsors and then going public, you're seeing companies stay private for a very, very long time, sometimes permanently. So how is that value being added? I can see how the first owner can maybe add some value, maybe the second, but then what's happening sort of further down the line when you're the 4th or 5th private equity owner of an asset?
You'll see more of that, and I'll come back in a second to your question, because companies go way later to the public market. We know that trend, we see that trend, less public company. The US, like 4,000 compared to 8,000 years ago.
Right.
Half, minus 30% over 7-8 years, less IPO. And the reason is that there is private capital, could be private equity, could be family investment, which really provides the right partners for those companies. Then to your question, how much can you do if you're the 5th investor with that profile of a private equity? Well, you'll be surprised of how much you can still do in terms of ambition. I mean, there are steps in the development of the company. Take the example of Moncler we were discussing, a second ago. We invested as a 3rd investor, from your definition, 3rd round, shall I say. 2011, the growth that we have had with Moncler over the last 8 years has been amazing, 25% every year. And what did we bring that other of our partners did not bring at the time? Global expansion, very clearly, in the US and in China, and product expansion as well. There's a lot that you can still do because you come in at the right point in time with your vision, at least you're 5 or 7 years ahead of you, and you have ample time to reinvest in the growth.
Okay, so on this point, one of the big factors, obviously, is if we're seeing fewer public companies, private companies staying private for longer, the kind of person who has access to the corporate world is changing. It's much more, as you say, it's in the hands of fewer, wealthier people. Should we be concerned about that? That the average person, it's much harder for them to get access to corporations, and certainly at an early stage.
Access to capital, you mean?
Access to companies, because companies are in the hands of private equity or in the hands of family office or sovereign wealth. And when they do come public, they tend to be much later stage.
Okay. Well, then, I mean, you're asking from an investor sort of standpoint, in a way, how can you have access to the development of those companies if you can't invest as a public investor in a public company? Well, you would be interesting to see that not only do we have investors like the one you've mentioned, the sovereign funds, the insurance companies, the pension funds, but more and more you'll see retail investments through placement through banks or insurance companies, which give access to the retail to be investing in private equity. And there's two reasons for that. The first one, there's less IPOs, there's less appetite of private investors to invest in public companies because there's been a lot of volatility. So retail investors really don't like that. Second, the returns of the private equity industry, the asset management industry, over time, over the last 10 years, 15 years, 3 years, has always been higher than public market can
Although
provide.
that delta has compressed.
Well, the delta compresses from time to time, over time, but it's always higher. And I think that's the important thing.